Hello, everyone. This is going to be an interesting chat today. Rosalie is traveling back from EthCC, and it's going to be me today. I'm going to keep it short, but again, I'm going to share some of my own alpha for my own trading, for my own portfolio. I was at EthCC as well, and as you can tell from my title, whenever you have to travel, we've seen this with the intern account, but when we have to travel, sometimes you don't want to carry your ledger with you, especially with the high risk of ranch attacks in France. Cannes was very nice, but overall, sometimes you just have to accept the fact that you won't be around for a while and not able to control or maybe trade. But then this is an opportunity for maybe risk management, and this is going to be a very good, maybe I think a very good show today because I'll show you what my portfolio looked like before, what the trade I did, which trade I did to make sure I was covered on both sides, and also what happened at the end of the day. Before digging into the details of that trade, we'll do the markets, but the markets at the end of the day did not move much. What we have here is most of them. Oops, let me shove my face out of here. Most of the markets were kind of okay. Some move, maybe some upward moves over the past few days, but overall, during the week at 8cc, if we take the 7 days, started at 27, 25.70, back to 25.30. It's fine, up and down. Again, I'm a option seller. I live on being short vol, so nothing exploded, no big moves. Even this one was certainly manageable. So nothing scary happened. If we go back the month, it's all the same. So I was good in terms of not getting caught off guard. Most crypto was the same, I'd say. Again, we can look at, I don't know if Solana got something, but maybe people weren't trading as much. But the whole market was sideways, which is fine. What I was worried myself about is that my own trading, my own portfolio has a lot of risks. Currently, it's mostly on the upside and downside, maybe a bit more on the downside because I'm trading delta neutral. But again, let me see my screen. But my portfolio contains many options. I'm trying to be delta neutral, so this is the whole P&L. What we see here is how much risks exist on both sides. Around 2,500 was when I set it up was neutral. On the when I hover my cursor at the current price, I have a delta of 1.4 ETH. Yes, 1.4 ETH. Maybe that's a good way also to look at how people should manage their risk. But on the markets page of the Panoptic interface, if you connect with your own wallet, you can see your whole portfolio P&L. I have several positions: 1, 2, 3, 4, 5, 6, 7, 8 positions. Long, short, neutral. I want to keep neutral, so which is fine. I have 1.4 ETH worth of delta, meaning that at the current price, even though my portfolio controls, I don't know, 100 ETH, I don't have much risk. It's pretty much flat, 1%. So any price move does not impact me that much. I want to keep it this way. But if the price were to go outside of what seems to be a healthy range, if it goes back to 1,000, I have 15 ETH for the exposure, and the other side I have 13 ETH. 13 ETH worth of exposure. So I control probably close to 40 or 50 ETH. Down the middle, no risk, lots of risk on both sides. We've seen these big moves. So my goal was, can I survive EthCC without having to trade, without having to manage my portfolio, and be able to kind of sleep well at night? And this is the basic use case for hedging. So what I looked at is that I have 15 ETH, 15 delta of risk on one side, which is that I would be owning 15 ETH. I have 13 on the other side. I wanted to nullify this risk. So if there's a cataclysmic event and price goes to 1,500, or if there's a huge bull run, I mean, the Robinhood announcement did not move the needle, but if it did, I want to have no risk on the upside. So one strategy that I chose was to buy a straddle. And that straddle, again, it's my closed positions. This is the last one I closed when I came back. It lost money, and then we'll go into details how and why this happened. But this was a not meant to make money, but rather to preserve my control my risk. I opened it up 9 days before leaving, closed it when I came back three again. I don't know, 6 days later. If we look at this position here, it's a weird four legs. We can have a look at the P&L. But again, this was again to offset 15 ETH on the downside, 14 ETH on the upside. This is one of the trade where I never buy options. In this case, it's only for hedging purposes. So this is four legs. I bought as many options as I could. I had to split into four legs. It creates that extremely attractive payoff, maybe because you say, hey, if price moves, I make money. But the way I set it up, I just create it so that I do not lose money if price goes up. So yeah, if again I use my cursor on the upside, I have now plus 12 ETH of delta on the upside, so that nullifies the 13 that I had. On the downside, if the price were to go to 1,000, I have negative 13 ETH. That kind of more or less nullifies the 15 ETH. So that downward shaping P&L that I whole portfolio got made a lot flatter uh, because of that trade. And this is maybe something that you may also think about when you're away, but this is buying two yearly options. Some people are buying yearly options, buying extremely wide ones. These are kind of wide, so I expect them to pay a little bit. And I needed a little bit more juice, so I had also bought two extremely narrow one-day options. These two started out of range. So if you look, this is the call option, and maybe there's a lot of dots here, but this is the range of the call option. When I opened it, the price was here, so it was not paying anything. Same thing here. This is the range of the put option I purchased. When I opened it, it was barely touching it. The hope was that I would not pay as much because I don't have overlap on the two strikes. And if it did move quite violently, it would leave that range. So again, two extremely wide yearly options to help with long tail hedging, and two very narrow out of range options to help with the sudden move or price movement that is a little bit more kind of range bound. And the goal again was not to make money, but to hedge what was the cost of me being able to sleep at night and maybe sip some rosé on La Croisette, was that I had to pay for it. This is an option that I paid $500 worth of Streamia. So if I look at the Premium tab, it's going down. It's paying. If you look, there's no slope here. So for a while, it was not even touching, I'd say, the two daily options. Now it came in the money. If you want, I started paying. Now I don't pay anymore. I didn't pay because it was out of range. So the cost of being able to sleep at night was $500. Some of this added maybe $200 worth of price move. It was still flat, but there was some price going down. I'm effectively controlling $80,000 worth of capital, only for 8,000 of requirement. So this was highly leveraged, highly, if you want, a convex payoff. It did not work out for me, which is fine because I did not want it to work out. I wanted it to be for protection purposes. And even though I may be losing 500 here, the rest of my portfolio was likely slightly the same area. So I was probably slightly below. I was paying a little bit more, but a little bit more than what I received, but not much more. So that 500 was a way to hedge. I would kind of trade the fees collected by my short options with this protection and paying fees for that straddle. And even though it did not work out, it allowed me to be extremely confident that I don't know what can move the markets anymore, but come to Jesus, they pray, Jesus promotes Ethereum, we're back to 4K, or the whole of Khan gets here by a meteor, every OG is dead. Now everything in between is where I was hedging. So that was good for me. So again, a lot of what people do in options seems to be maybe trading, seems to be a bit more advanced. This is a hedging trade. I use it quite a bit myself because I don't want to get caught. And in that specific case, it worked out for me. So the rest of my portfolio looks fine. ETH, BTC, I have a small position, but this one is also fine. Again, all of the other positions are earning, and they've been earning since I was gone. So this is still good. And again, I'm managing positions well, no need for hedging, so I close my positions. Now the gas is going down, so I'll probably discuss the next trade I want to do again, and maybe I have this as a setup. I'll try to keep it short as well, but When I start a trade, I look at my whole portfolio again. In this case, I get some pretty balanced delta neutral. I do have some ETH, but for me, ETH is free, so I don't use this in my PNL. I try to optimize. I don't use it deposits. If I'm neutral, that means I earn ETH and USDC in equal measures. This is what I want to look for. I don't want. I don't. I'm implied long ETH, but if I were to do this, I would miss on the gain. So I'm just trying to accumulate as much ETH, as much USDC. That's why we have this toggle. So this is neutral. I may have a little bit of positive delta, but I'm fine with this. One trade I want to do is one which is also neutral. And then as I'll discuss, I'm still worried a little bit on the downside move. So I'll create some protection as well, hedging one position with another one. So here, the way I typically trade, I go on the main trade page. I like to do the straddles. So I'm going to create a short straddle. I can choose wherever I want, but I typically want to be close to being at the money. Now, actually, I people coming back of EthCC, there might be some extra maybe news or some events, but it's kind of known. A lot of the folks here are in the know. I don't think there's going to be a lot of risk to the upside. If it was something that Robinhood was bullish, maybe we'd see the price move this morning when the markets opened or last week. Now I'm not really worried about the upside. I'm a bit more worried about the downside. Always some risks. So I'm going to do a slightly shorter time bet. I do a weekly option. I'll set it up so that it's kind of at the money. And because I'm worried about the downside, we may still revisit 2000. Who knows? I'm going to buy an option, buy a put here, and I can change this. I can go wherever I want. This is the weekly option. There's not a lot of liquidity here. So what I do is that I sell a straddle at the weekly time scale, but I'm going to open this up and buy a put at the monthly time scale. And I scope this one. There's one big chunk of liquidity here around the 2130 strike. So what this is going to create is protection on the downside. If there's a huge move, this put will work for me. I'm going to lose less. If there's a cataclysmic move, I'm going to lose at most. Maybe let's do 10%. Nah, I'll do a little bit more. Yeah, let's say 5 ETH. So I lose at most. I lose $1,000. The most I can do if I keep this for a week is $500, which is great. Some risk to the upside, but I'm okay with this. I'm not really long, so that's not something I'm worried about. So that would be. This is a a ratio. This is a big lizard, I guess. You set a straddle and buy one of the wings. In that case, if I were to buy the other one, it's an iron condor. Now it's just a big lizard. This is the trade I'm going to do. Capitalize on some of that sideways action in a weekly time scale. I'm comfortable. The longer term one means I pay a little bit less, but have some protection. And just from there, I'll be able to add one position to my portfolio and have this be kind of higher roll. So again, that's right. It's eating a bit to my buying power, but it's fine. I can manage this. I'm looking for a short-term play. So that would be my trade. Like we do always, I'll try to paste this on YouTube. You or someone else can try to replicate this as well. Otherwise, you can watch also the trades if you want. This is the Tickon ID. This is how you do it. So, but yeah, I think I wanted to keep this short. This is me discussing my hedging trade, how I approach these maybe singular events where I'm not around, buy straddles, and now that extra one, which is how can I capitalize on the market, markets moving maybe sideways, for the first downside, let me buy a put. So yeah, that's it. I want it to be 15 minutes, about 15 minutes. This is great. Again, I'm so happy for everyone that showed up at Con. Glad that you could make it to our event. Glad that we could meet. Met a lot of our users as well. A lot of folks that were following us for this last few years. Very grateful that you guys came. Happy to have chatted with so many people. Again, the rosé. What? And then Rosalie's coming back. But the weird thing about Con is that they serve a lot of rosé wine, so wine, but they put ice in it. So I thought they didn't want me to get too drunk too fast, but the ice definitely helped. Very very refreshing. Anyways, looking forward to next year's, of course, Karen. But again, if you have any questions, also reach out. Could be on Twitter, could be on Discord. Always happy to help. And yeah, this is it for me. Let's do the outro music. We'll give it a try again with Rosalie. We'll see how that went with the portfolio. Um, the Solana ETH one, I'm interested to see as well. But yeah, overall, this was great. I'll see you guys on Wednesday with Brendan and Rosalie and everyone. All right, have a good one.